Today I'm going to show you guys how you can trade these gaps in the market. I always trade these gaps because they present a very nice trading opportunity almost every time. So what you're going to do is you're going to mark out the low of the gap level here, and then you're going to wait to New York session. You're not going to be trading this strategy in other sessions other than New York session, and not before that either. So now you'll just be waiting for the level to be hit at New York session, obviously. And you're going to be trading this strategy on the 1 minute time frame. So I'm going to go down to the 1 minute time frame. And now, once the level is hit, what you're looking for is a market structure shift with displacement and a fair value gap. So we're going to wait for that. Right there we got the market structure shift. And we have a very, very small fair value gap right here, but that's enough. Now you can use the measure tool to measure a displacement to see if it's big enough. In this case it's 400, so that's plenty. And now you're just going to mark out the fair value gap. It's a very small fair value gap, but it is enough. It is a fair value gap. And now you're just going to enter on the fair value gap, have your stop at the low, and then target a 1 to 2.5. And now you're just going to wait for your entry to get hit. So we're just going to wait for that. And there you got entered into the trade. Almost got stopped out, but eventually got the take profit. I actually took this trade on a funded account. Now, there are a few rules I like to implement when trading this strategy. For example, with the stop loss, I like to place it a bit below the low or the high, depending on the trade. Another rule I have with the stop loss is if it becomes bigger than 35 points, I will not be taking the trade, because that means your take profit will be way too big, and this is going to become a low probability trade. There's also another rule that I would like to mention, and that is if you have a liquidity level close to this level, I will only be risking 0.5%. So this is yesterday's low. There's a lot of liquidity under this level, but let's imagine this level was right here, very, very close to our trading level here. I will only be risking 0.5% because there's a very big probability that price will sweep our gap level, go a bit up, and then sweep the yesterday's low, and then make the big move. So that's something to consider as well. So that's basically how you trade the void, gap, whatever / strategy. It is basically just a liquidity level where you wait for it to get swept, and then once it gets swept, you're just going to use a ICT 2022 mentorship model actually. So this is basically the strategy. You can also implement your own rules. I suggest you go and backtest this strategy yourself. It is very, very effective, and I've been using it for a long time now.